Money printer go Brrr. Call it the put, call it monetary easing. The Powell pivot that so many have talked about for so long is finally here.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Guten Tag, buenos dias, morgen, and welcome to episode 180 of the Bitcoin Bulletin Podcast. Well, it is another Bitcoin conference week, so if things seem a little quiet out there, many of your favorite influencers are in Las Vegas tonight for Tone Vays' Unconfiscatable Conference. Of course, tonight is their Scammy Awards, so I can't wait to see that once it finally hits YouTube. If they post it, I couldn't find a live feed for any of the conference when I was searching earlier, just for giggles. Here on the Space Coast, it has been another absolutely glorious day. I started the day on the beach watching the sunrise. I got to see a shark feeding in the shallow water. That was kind of cool. People wonder why so many shark bites happen close to shore, and at least here, that is because the sharks basically feed at the surf line. So where the bait fish run up and down the beach between basically the beach and offshore where the waves just first start to break, ironically, where the surfers wait is usually where you see the sharks feeding, and it's not unusual to see them chasing the little fish almost all the way into the sand where like half the shark is exposed in the water, flapping around as it chases the fish. It didn't get that exposed. All I saw is basically its tail and its fin, and then a whole bunch of bait fish jumping out of the way. But that was kind of cool. Something unique this morning. Yesterday was an equally great day. We had a rocket launch. For those of you in the European Union, you got 2 more brand new Galileo satellites in orbit. Then we had, of course, the Harvest Moon, which was a supermoon, one of the largest appearing full moons of the year. And then a few hours later, a partial lunar eclipse. But we also had $59,000 Bitcoin. So that leads me to the question, did you buy the dip? Of course, we DCA here on the Bitcoin Bulletin Podcast, but that doesn't mean we don't add to our stash from time to time when Bitcoin is on sale. And I personally think that anytime Bitcoin is below the previous cycle's all-time high, then that qualifies as a sale. Naturally, we don't count the Satoshis that we pick up on the side, when we smash by in our DCA average stash, because we don't want to taint those numbers as far as for the scientific value of the data that we're accumulating by dollar cost averaging every Wednesday. But I'm getting ahead of myself as usual. We do have a lot to talk about today, and of course we will get into that DCA Wednesday stack. But first, let's take our customary look at the vital statistics. At the time of this recording, we are at a block height of 861,912, and Bitcoin has pumped a little bit since last DCA Wednesday. Actually, it's pumped almost $4,000, ringing in at a US dollar value of 61,770 US dollars per Bitcoin, or 1,619 sats per dollar. And this is one of those, not oxymorons, but it's one of those double-edged swords where you're excited to see the fiat value, the fiat price of Bitcoin, the fiat value of your stack go up, but it also means we're going to be getting fewer sats today. We're going to be getting 100 sats fewer per dollar that we convert into Bitcoin today. So that is sad, especially while we're trying to grow that stack aggressively, or as aggressively as we can, because there's only ever going to be 21 million Bitcoin, and every day it's going to get harder and harder to accumulate those sats. And like Parker Lewis says, that's going to happen gradually than suddenly. You might not notice that there's fewer sats or that it costs a little bit more today, except, during a bull run when the price goes on its face melting, bull run, its face melting number go up tear. But in general, oftentimes looking back on a cycle or back on Bitcoin at any point in time, it often feels like we were going sideways when we really aren't. I mean, even when Bitcoin looked like it was going sideways in the 58,000 range and the 58K gang was having their fun, that was double where Bitcoin was just a year ago. So as with everything, zoom out. But unfortunately, as number go up, it means it's going to be harder and harder to grow that stack, at least as far as the number of Satoshis in your stack, even if fiat value goes up. So the idea is we're trying to accumulate as many sats as quickly as possible while there's still people silly enough to sell us Satoshis for filthy, worthless paper money. Bitcoin's current price gives it a market capitalization of $1.22 trillion. So almost $1.25 trillion again. We were about $1.25 trillion back in July, and then we dipped down into the teens as, Bitcoin retraced into the mid 50s there for a while. I think we saw Bitcoin as inexpensive as 55,000 not too terribly long ago, in the grand scheme of things. For those of you who value wealth in shiny yellow rocks, it will currently cost you 24 ounces of gold to purchase just one Bitcoin. That is 1 full ounce more than last DCA Wednesday. And that's even as gold in fiat terms is pretty much at its all-time high, maybe just a few dollars an ounce off of the all-time high it set the other day. Of course, it's not unexpected that gold is getting more expensive because gold is a commodity. Everything is getting more expensive. If the bacon and eggs at the grocery store get more expensive and the aluminum cans that they're, canning your Diet Pepsi or your beer in gets more expensive, obviously gold gets more expensive as well. Despite all the cheering and the rah-rah sis-boom-bah from Peter Schiff and the other gold bugs, Bitcoin is really not even keeping up with inflation. It's had a decent run in the last couple of months, but really, when we started this podcast 3 years ago, what was Bitcoin in like the $1,800 an ounce range? And so it's up less than $1,000 an ounce. So not even 50% over the last 3 years, if you average that out. Whereas Bitcoin has doubled in price just in the last year. And, when we first started purchasing for the DCA Wednesday series, I guess we bought at the all-time high of the last cycle. So I guess that's a bad data set. But the previous cycle, Bitcoin started in the teens, and I guess we got as low as 18,000, I think, before Bitcoin, at the lowest point, I guess, before we rallied and set another new all-time high just prior to the halving. Again, getting a little bit sidetracked here. The point being, gold is continuing to trend to zero in Bitcoin terms, even though it is up in fiat terms. But then again, what isn't more expensive today in fiat terms? For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 3,454 large pepperoni pizzas from Papa John's. That is one pizza a day, every day for almost 9.5 years. Certainly a lot more pizza than Laszlo got when he purchased 2 Papa John's pizzas for 10,000 Bitcoin 14 years ago, just a little over 14 years ago in May of 2010. And as I've said almost ad nauseum now, I believe that we've reached the point where if you had one whole Bitcoin and you decided you were going to try and spend that Bitcoin by eating it one pizza at a time, and you were going to order one pizza every day, I don't think you'd ever be able to spend that Bitcoin, because remember, 9.5 years from now is whatever happens this cycle, and I believe this halving cycle hasn't even started to kick off yet. The bump we saw because of the spot Bitcoin ETFs was a golden swan event, but it doesn't correspond with, and I don't believe it has any effect on the looming supply shock bull run that usually takes about 6 months to a year to get going after the halving. I was listening to a podcast the other day and they broke it down, and I think they said it takes on average 170 days before the bull run really kicks off after the halving. Again, that varies, and that's why I say 6 months to a year. But I would have guessed that we would start seeing the price of Bitcoin start ticking up this fall, and fall is coming. Depending where you are, it might feel like fall. I see people posting in the northern part of the United States or up in the higher altitudes in Colorado that the leaves have already changed color. It doesn't feel like fall here in Florida, where it's in the upper 80s. and really humid. And of course, in the peak of hurricane season, which is the hottest, muggiest, most humid time of year for us here in Florida. But the point being, I would not have expected the bull run to have started at least noticeably. Maybe it would start coasting up about now, but it really wasn't going to get roaring until I said around what, Thanksgiving or Christmas. And that's when I would have expected to see Bitcoin retake its 2020 halving all-time high before going on to set its ultimate cycle all-time high sometime in 2025. So anyway, my point being that we're going to have that new all-time high, and then you're going to have the 2028 halving. So sometime in 2029, we'd expect to see a new all-time high. Then the 2032 halving. So in 2023, we'd expect to see a new all-time high. And so who knows what your Bitcoin would be worth by the time that happens. It might get to the point where, you're spending so few Satoshis each time you buy a pizza that that Bitcoin stash is going to outlive you. And that is really cool, at least to know that if you're a whole coiner, if nothing else, you could probably eat one pizza a day for the rest of your life and never run out of Bitcoin. Not that I encourage you to eat your Bitcoin one pizza at a time. That metric that has been my favorite for most of the history of this podcast, Bitcoin's 24-hour average transaction rate, is up significantly from last DCA Wednesday. Last DCA Wednesday, we were averaging 4.84 transactions per second, and currently transactions are flying in on average at 6.25 transactions per second. And again, this is just a casual observation from looking at the statistic every Wednesday for more than 3 years now. Every time we've seen that transaction rate ticking up, the price of Bitcoin was ripping up. And that is certainly the case today. Of course, they say correlation is not causation, and that's not any kind of official TA. I think all transaction analysis is hooey anyway, but it's fun to look at, and so far it's held true. Of course, they say that even a broken clock is right twice a day, right? So you never know when this isn't a model, when your model will break and when that will cease to be true or not. But it's fun to track, and even if you don't correlate it to the price of Bitcoin, it's a healthy statistic to know just exactly how much activity is out there on chain. And maybe as more and more people start using Lightning or whatever layer 2 we end up using in the future, the layer 1 transactions will become few and far between. Maybe only banks and millionaires and billionaires will be moving around, nation state amounts of money on chain, and the rest of us will be using Lightning or whatever comes along on layer 2, in the future. But for now, I think that's a valuable metric, and if nothing else, it's certainly fun to look at that metric every Wednesday. Speaking of on-chain activity, the mempool looks like it's cleared out quite a bit since last DCA Wednesday. Clark Moody's dashboard is showing 96,573 transactions in their mempool. And scrolling back through my notes, that is the first time until I run out of the notes that I have open that we've seen the mempool with less than 100,000 transactions. So that's actually more than a 42% decrease from last DCA Wednesday, more than a 71,000 transaction decrease. So about half, little more than half, but approximately 42% less than last DCA Wednesday. Mempool.space always has a much larger mempool, but they're still showing a decrease from last week. Last week, there were 216,000 transactions in Mempool.space's mempool, and right now there's only 183,372 transactions. So that's 33,000 transactions fewer than last Wednesday. So a significant decline, significant decrease, not the 42% that Clark Moody's showing, but a decrease nonetheless. So apparently some of those transactions cleared out when we had the much lower activity, when Bitcoin's price was suppressed, when it was even below 58K in the last week. If you need to send an on-chain transaction, if you're not using Lightning, if you're sending Bitcoin to your hardware wallet, or you're moving it, buying something expensive with your house or with your Bitcoin, a house, maybe paying for an education, etc., and you have to do that on chain, it is a little bit cheaper this week than it was last week. Currently, if you have to do a priority transaction, Clark Moody's dashboard is recommending a fee of 5 sats per VByte, down from 6 sats per VByte last week. Of course, if you have a few hours to wait, they're saying a fee of just 2 sats per VByte will be mined within a day. That is the same as last week. And also the same as last week, they're still recommending a fee of at least 2 sats per VByte, even if you have up to a week to wait. Mempool.space is saying exactly the same thing they were saying last Wednesday. They're recommending a fee of 3 sats per VByte, regardless of whether it's a transaction you want included in the next block or a no priority transaction. They're recommending 3 sats per VByte across the board. And at Bitcoin's current US dollar value, that's just 26 cents in US dollar terms for a high priority or any priority Bitcoin transaction, which is really cool. I mean, if you spend money at the grocery store and you swipe your debit card, most of the credit card processors out there charge like a 25-cent per swipe and then like a 2 or 3% percentage for processing your debit or credit card transaction. And in the United States, you're not paying that directly. Obviously, it's passed on to you in terms of the price of the product you're paying. And I guess in other countries, you have to pay that yourself. But my point being, 26 cents is cheaper than a basic debit card or credit card transaction, let alone cheaper than a wire transfer or even an ATM fee. So many ATMs out there are charging $4 or $5 just to take your own money out of an ATM. And for Bitcoin, you can move any amount of value anywhere in the world on average for just 26 cents right now. And that is pretty incredible. We are about 8 days away from the next Bitcoin mining difficulty adjustment. Last week, it was looking like that was going to happen September 24th, but blocks have slowed down a little bit. So now it's looking like it's going to happen on September 25th. We're 936 blocks away from that difficulty adjustment. As you know, the Bitcoin Core protocol adjusts the difficulty that it takes to mine the next Bitcoin block every 2016 blocks, which is theoretically every 2 weeks, with the goal of having transactions coming in once every 10 minutes on average. And when they're coming in slower than 10 minutes, the difficulty is relaxed a little bit. When it's coming in faster than 10 minutes on average, it gets a little bit more difficult to mine Bitcoin. Last week, we were so close to the previous difficulty adjustment, which was an increase, that the estimates were all over the place. They weren't even really worth mentioning. Now that we're much closer, the estimates are getting a little more refined, a little more honed in, and it's looking like it's going to be a decrease. It's still too soon to tell, but depending on where you get your data, it's looking like we're going to see a decrease in difficulty of anywhere between 2.39% to 5.2%. So if you're mining at home, you're going to get a few more Satoshis for your mining power. If you're a large commercial miner, you may get as much as 5% more profitable. And that's interesting because people have been talking a lot about miner capitulation. Miner capitulation is the thing that happens every halving cycle, and that is when the miner reward gets cut in half, instantly at the halving, miners are making half the profit that they were just the block prior. And most miners should be smart enough to know that's coming and to have planned for that accordingly, but it seems like every year some miners don't get the message. And this year, because of the ordinals and inscriptions, the BRC20 spam, there were times when there were more fees per block than the miner reward, the fresh Bitcoin you got for finding a block. And so I think that delayed miner capitulation a bit. So maybe we're starting to see miner capitulation, and that's responsible for the decrease. Although if you look at the 90-day average of hash rate, it's actually up about 4 exahash. Last week, it was looking like there were 617.5 exahash of mining power securing the network. And currently the 90-day average is 621.5. So that doesn't jive with the difficulty decrease. So there must have been some hash rate getting turned off more recently that hasn't had a chance to reflect in the 90-day average yet, because currently blocks are averaging 10 minutes and 34 seconds, which is obviously slower than 10 minutes. And so hence the forecast decrease in mining difficulty. All of this is basically, song and dance. It doesn't mean anything to you if you're an average pleb and you're just sending Bitcoin to your hardware wallet or giving Bitcoin to a friend to pay off a bet that you might have lost, whatever your case may be. Because again, that's just an average. So the next block could come in 1 minute, or I've seen them taking over a half an hour in the last day fairly often, which I guess kind of contributes to the 10 minutes and 34 second average. But the point being, even if they were coming in at exactly 10 minutes and 34 seconds, one after another, if it wasn't an average, if that was a legit benchmark between blocks, the difference between 10 minutes and 34 seconds and 10 minutes is almost negligible. You wouldn't even notice it when it comes to waiting for a transaction to confirm. More likely, you'd be waiting for the block that your Bitcoin transaction is going to get mined into, especially if you're lowballing that transaction, because there are plenty of blocks out there that have had fees below that 3 sats per VByte that mempool.space was recommending. I've seen plenty of 2 sat per VByte transactions confirm. I haven't seen any 1 sat per VByte transactions confirm yet. Not in the last several months anyway. But so let's say you do want to lowball and you want to try and be one of those 2 sat per VByte transactions, even though it's 3 sats per VByte is only 26 cents, plebs. But you do you, and if you have a lower fee that you set for your transaction, you're not necessarily going to get in the next block. So that 10 minutes and 34 seconds is moot if you end up waiting 3, 4, 5 blocks or more for your transaction to get included in a block. Real quick, I want to take a moment to thank those of you listening on your favorite Podcasting 2.0 app. If you normally listen on Spotify or on Apple Podcasts or on anything other than Fountain, I recommend that you stop what you're doing, download Fountain, and restart this podcast on Fountain, because Fountain does 2 things. First of all, it allows you to earn Satoshis just for listening to your favorite podcast. That amount varies. It's randomly assigned in the first hour a day that you listen. But yesterday, for example, I only earned 10 Satoshis for listening to a podcast. But that's 10 Satoshis that you could be earning for listening to the sound of my voice right now that you're not earning if you're listening on Apple Podcasts or Spotify, etc. But perhaps more importantly, Podcasting 2.0 allows you to support this podcast through the value for value method, where you can either stream sats on a per minute basis as you listen, whatever you feel value you're receiving for listening to this podcast. That's up to you to determine, whether it's 1 Satoshi per minute, 10 Satoshis per minute, 100 sats per minute. You can set it and forget it and stream value back to this podcast while you're listening. Or what is my favorite method is the boost method, which is a shout out, but it's a shout out via the Lightning Network. So you send a message to the podcast letting me know what you think, or just saying hi, or whatever you want to say. But that message comes with some Satoshis. And, if you earn 50, 60 Satoshis a day listening to podcasts, you can turn around and contribute that back to whatever podcast you feel like gave you the most value. But again, we're not doing this podcast for the money. I don't think most people are. Obviously, some big podcasts are, and you hear them read 5 or 10 minutes worth of commercials at the beginning of the podcast or splice them in throughout the podcast. We do not have any sponsors here. I'm doing this because I love talking about Bitcoin. You can't get me to shut up about Bitcoin, and most of my friends and family members don't like to listen to me talk about Bitcoin all day long. So I get to talk about Bitcoin to you. And obviously you want to hear about Bitcoin because you're listening to a Bitcoin podcast. Nonetheless, if you feel like you have received value by listening to this podcast and you want to contribute value back, you can do so through Podcasting 2.0. And my favorite way to do so is with the Fountain app. All right. Speaking of our listeners, once again, our geographic distribution of listeners has ossified. It has not changed since the beginning of July. Our top 10 countries by listenership remain as follows. Number 1, where more than half of you are listening, remains the United States. So hello to all of you out there in the United States, whether you're here in Florida or up in Alaska or anywhere in between. Thank you so much for listening. Number 2 remains Argentina. So hola, muchas gracias amigos in Argentina. Number 3 remains Germany. So Dankeschön, mein friends in Deutschland. Number 4 remains Canada. Speaking of places they're getting colder, where fall is probably in the air and the leaves are changing colors. Hello to those of you way up north of us in Canada. Thank you for being the number 4 country. Number 5 remains Luxembourg. So Dankeschön, mein friends in Luxembourg, or Morgen to those of you out there listening that speak Luxembourgish. Number 6 remains Spain. So hola, muchas gracias amigos in Spain. Number 7 remains Colombia. Again, hola, muchas gracias amigos in Colombia. Number 8 remains Mexico. Hola, muchas gracias amigos in Mexico. Number 9 remains Australia. So hello to you down under in Australia. Thank you for listening. Thank you for listening in numbers that keep you in the top 10. That was one of the changes in July. Australia burst into the top 10 for the first time on July 17th. Number 10 remains the United Kingdom, so thank you to those of you listening across the pond, to our cousins in the United Kingdom. All right, on to the news. Of course, the price is off in the news, and the price of Bitcoin is up substantially yesterday from up today from yesterday. Even in the last, even while I've been talking, I've been watching the price of Bitcoin going up, and a lot of that was anticipation of the U.S. Federal Reserve announcing their interest rate policy this afternoon, and most people were expecting that they were going to do anywhere between a 1/4 point interest rate cut. They ended up doing the 0.5% interest rate cut, which was kind of baked in the pie. I think the betting markets started gravitating towards a 0.5 point, 50 basis point interest rate cut in the last day. It went from only about a 13% chance to about a 60% chance the last time I looked, and that was this morning while they were waiting for that announcement. So ultimately, that ended up being what happened. We've got headlines out there, for example, on Business Insider. The Fed went big with its first rate cut. Here's what markets think will happen next. Traders on Wednesday upped their bets that the Federal Reserve would continue to aggressively cut interest rates this year after the central bank began its long-awaited easing. Furthermore, the Fed dot plot, which is their forecast for how they foresee interest rates for the remainder of the year and for 2025, apparently suggests there's going to be at least 2 more interest rate cuts in 2024, 2 more 1/4% cuts. Of course, that all depends on what happens with the economy, because, I think this is all hooey anyway. None of you listening to the sound of my voice think the Fed had any say in the fact that inflation went up and any say in the fact that inflation went down. Yeah, maybe they can affect the cost of goods as far as demand goes. And that's what they try to do. They try and quote unquote cool the economy, basically put people out of work, because that affects the the demand side of the supply and demand equation. When in reality, what we had money printing run amok over the last 4 years, and that's what caused prices to go up, because prices weren't really going up. The value of the dollars were going down. It was taking more US dollars or more pesos or more euros to buy the same goods. But in apples to oranges terms, dollars to donuts terms, the cost of goods were staying the same pretty much relative to each other. So this is all just smoke and mirrors. And of course, it's an election year. And what they're really worried about is the economy. And now when the average talking head, the average financial pundit is talking about the economy, the barometer that they usually use is the stock market. So when Wall Street's getting rich, it's a sign the economy is doing well. And so it's no surprise that they cut interest rates just less than 2 months away from the presidential election, because they want Wall Street to look like it's just going gangbusters, because that helps the incumbent get reelected. And if you help the incumbent get reelected, if you're the chairman of the Fed, you have job security. But I digress. It looks like the average person on Wall Street out there is pretty much banking on two more 25 basis point interest rate cuts by the end of the year. Any way you slice it, that is monetary easing, and that increases global liquidity. And as Lynn Alden says, she expects the price of Bitcoin and the price of pretty much everything to increase, along with the increase in liquidity. The more money's out there chasing after goods, the more expensive things get again, and that includes stocks, and it includes your Bitcoin. Caitlin Long tweeted about this just yesterday, not about liquidity, but about the upcoming interest rate cut, saying, "Grab the popcorn. We're all about to see whether Senator Elizabeth Warren has political juice in DC. Remember, she once called Powell a dangerous man, and her minions control federal financial regulatory agencies right now. Will she get 75, or will she be revealed as swimming naked?" And what she's referring to is the letter that Elizabeth Warren wrote 2 days ago now to Fed Chairman Jerome Powell, calling for a 75 basis point cut, basically demanding a 75 basis point cut, saying they've waited too long. The economy is going to tank if we don't get a 75 bip rate cut, that we're going to have a recession. And so what Caitlin Long is referring to is whether or not the Fed bowed to Elizabeth Warren and went with the 75 basis points, or whether they don't. Of course, they didn't. We now know the answer to that. I personally don't think that Elizabeth Warren expected a 75 basis point cut. I think this is one of two things. Either she is jockeying politically. Well, she's jockeying politically, but either it's because she's trying to flex her political power, or she knows a recession's coming and she wants to pin the blame not on the people that are in power right now, of which she is. When they have the recession, saying, "See, I told that Jerome Powell that he was going to cause a recession by not obeying my letter that I wrote demanding a 75 basis point interest rate cut." And I think that's really what it is. But if Caitlin Long is right, it means Senator Warren's influence is waning. I don't think that's the case. I think if we see Kamala Harris elected president in November, I think you're going to see Senator Warren potentially Treasury Secretary or elevated in some way to even more powerful than she currently is. And right now, she runs the roost in the Senate as far as banking and financial policy goes in that branch of government as it is. So I don't think her political juice, as Caitlin Long puts it, is waning at all. I don't think this was indicative of that at all. I think the only way that we neuter her power is by the current administration getting tossed. Because if you remember when Donald Trump spoke at the Bitcoin conference in Nashville, he promised to fire Jerome Powell, and he promised that the day he's elected, Senator Warren's war on crypto, quote unquote, comes to a screeching halt. But I guess we'll find out in November. Either way, the markets got their larger than originally anticipated rate cut. They didn't get a 75 basis point cut, but pretty much up until this morning, everybody had been expecting just a 25 basis point cut. Nonetheless, markets didn't boom. They went up for a little bit this afternoon, but then pretty much all the markets, the stock markets, ended down. The S&P ended down 0.25%. The NASDAQ ended down 0.31%. The Dow ended down 0.25%. Even gold is down 0.6696% today. So I guess it's one of those things, buy the rumor, sell the news. Speaking of the economy, speaking of that upcoming recession that Elizabeth Warren might be trying to hedge, the Wall Street Journal posted a disturbing article just 4 days ago indicating that things aren't quite as rosy as those would have you believe, with the headline, "Americans are falling behind on their bills. Wall Street is alarmed. Lenders see a rise in late payments on credit cards and auto loans." Now, this is something I've spoken about in the past, that credit card delinquencies were at all-time highs, that we were starting to see late mortgage payments, that people were getting dangerously close to that point where they're far enough behind on their mortgage payments, they start seeing evictions. Whether or not that pops the real estate bubble, if we get mass real estate foreclosures, which means a lot of banks dumping properties onto the market, that would tend to depress the prices of real estate, which wouldn't necessarily be a bad thing, because real estate's one of those things that inflated faster than just about anything else other than maybe gasoline or groceries. Anyway, the article continues, "Signs that Americans are struggling to keep up with their bills is setting off alarms on Wall Street. Shares of consumer lending companies slid this past week after executives raised warnings about lower-income borrowers who are struggling to make payments. Dour remarks from banking executives at the Barclays Banking Conference rattled investors who were already on edge about the health of the U.S. economy." So basically, this ties in with the Fed's decision to break with tradition and go ahead with that 50 basis point cut instead of 25. I think they're worried about a recession. And I think that they want to do whatever they can to forestall it or at least to give the illusion of forestalling it until after the presidential election. Another Business Insider article talks about the interest rate cut, saying the Fed put is back. Here is why central bankers want to support the stock market, according to FundStrat's Tom Lee. So Tom Lee raises his head again. If you remember the last cycle, he was predicting a $100,000 Bitcoin. By the end of, it might have even been 2 cycles ago, by the end of whatever year it was he was predicting. He was obviously wrong, but he was steadfast in that prediction until it came time to, till the end of the year, when it was obviously not proven not to be true. The article says a 30% decline in the stock market would almost guarantee a recession, which is one reason why Fed put is back on, FundStrat's Tom Lee said. That's kind of putting the cart before the horse. Stock market declines don't usually cause recessions. The stock market goes down because of a recession. the value of a stock goes down because the companies are losing money. Companies are, potentially going to go bankrupt. You'll lose all your investment. That is the reason that the stock market is going down. And so we have a recession. It's bad for business. Therefore, the valuation of the business goes down. That's reflected in the stock price, not vice versa. People don't just randomly decide a stock is worth less and, oh no, we're in a recession because of it. He said, the article goes on to say, foremost, the Fed put is back. That means the Fed's mandate is now primarily supporting a strong labor market, Lee wrote, pointing to fears that more job weakness could signal an oncoming recession. That means the Fed wants a healthy economy. Well, duh. That's kind of what I was saying when I was saying that the whole reason we got the big interest rate cut is because he was hoping it would spur the stock market, that it would look like everybody's getting fat, dumb, and rich, and they would be more likely to vote for the incumbent party if that's the case. Americans at least tend to, quote unquote, vote with their wallets. It's one of those things where they say, are you better off today than you were 4 years ago? And if you try and talk about things even about the border, most people in the United States don't feel the direct impact, although they're starting to, of the wide open southern border, or they don't see the impact of other regulatory decisions that the government made during the last 4 years that may very well be impacting them, but just not in a way that they notice or at least pin the blame for. But not being able to afford to go to the grocery store is something that people absolutely notice. Having to put back something that you picked out because you're over your budget is something people notice. And so that's what I'm talking about when I say people vote with their wallet, and giving people the illusion that they're getting wealthier than they are because their stock portfolio goes up because the interest rates were cut can have a very big political impact. And I think that's what we're looking at. So Tom Lee's he's got a point here when he's talking about that what the Fed is doing is trying to spur a healthy economy, although I think they're trying to spur the illusion of a healthy economy, at least until after the U.S. election. So the long-awaited Fed put or Powell pivot is here. Of course, many thought it would happen a lot sooner. As you recall, there's a lot of people out there that were saying, I think even like Larry Lepard was saying like 2 years ago that it was imminent that the Fed was going to cut rates, that they were going to have to cut rates because if nothing else, these higher interest rates were going to have a huge impact on the U.S. national debt. They're going to make it impossible for the government to service its loan payments. They're going to have to sell their bonds, with higher rates, pay more money basically to borrow money. It was the cost of borrowing for the government goes up when interest rates go up. And so that's why so many people thought that Powell was going to pivot a lot sooner than he did. But either way, here we are. Whether you thought it was going to happen 2 years ago or whether you didn't think it was going to happen, and even yet, if you figured that they weren't going to cut rates today, all that matters now is that it has happened. All the forecasting and the prognostication is behind us. We have officially entered the new era, the era of easier money, the so-called Fed put or Powell pivot. Speaking of Wall Street, if you've been paying attention to the Bitcoin ETFs, they've been soaking up Bitcoin again. Whale Panda tweeted today about yesterday's ETF flows. We don't have the numbers for today's ETF flows yet, but good morning. Yesterday's Bitcoin ETF flows were positive again for 186.8 million. Fidelity did 56.6 million, Bitwise did 45.4 million, ARK did 42.2 million, Bannock did 20.6 million, and Invesco 10.2 million. BlackRock stayed at zero. Price jumped from 59K to 61K. Today is announcement of the rate cuts. Question is, how much will it be? Plebs, I shouldn't have to remind you, do not sell your Bitcoin to Wall Street. And of course, get those Bitcoins off of exchanges. There will not be Bitcoin price volatility, or at least not like we're accustomed to, when we are all in a Bitcoin standard. Because you'll be buying goods and services with your Bitcoin, and there won't be millions of Bitcoin sitting on exchanges for people to use to manipulate the price. Of course, there will always be upward price volatility as people realize that they've missed the lifeboat, or that the lifeboat's pulling away and they're gonna miss it, and they get desperate to try and buy whatever few Satoshis are left for sale. But even then, eventually trading will be such a small part of Bitcoin's total 21 million supply that it'll be negligible. They won't have these massive buy walls and these massive sell walls to swing the price. And you can help get us there now by getting your Bitcoin off of exchanges, because if your Bitcoin is sitting on Coinbase, Mark my words, Coinbase and other players are using that Bitcoin. They might not be rehypothecating it, but they're using that Bitcoin to manipulate the price. And don't sell your Bitcoin to Wall Street. We want as many Bitcoin as we can possibly have in the hands, in the hardware wallets of individual plebs. And every Bitcoin that gets sucked into, institutional custody by BlackRock or by Fidelity or any other company on Wall Street is Bitcoin that is never going to end up in the hands of plebs. It's Bitcoin that will never fulfill its purpose of being a peer-to-peer electronic currency. It's Bitcoin that someone will not be able to use as a lifeboat because it's Bitcoin that will not be available for them to purchase. Maybe in the short term, it'll help the price of your Bitcoin go up in fiat terms. But eventually, we're going to be out of Bitcoin for sale, whether BlackRock buys it or not, and the price is going to be what the price is going to be. The only question is, how many millions of those coins are controlled by Wall Street and by big banks, and how many are circulating in the hands of plebs. Speaking of the supply of Bitcoin, another mining company appears to have learned their lesson. No BS Bitcoin ran the headline. Cathedra Bitcoin shifts focus from mining to Bitcoin acquisition strategy. After 7 years in the mining business, Canadian Bitcoin miner Cathedra Bitcoin is altering its focus. The company is now shifting to developing data centers and plans to use the profits to purchase Bitcoin instead of mining it. The article goes on to say that Cathedra currently holds 43 Bitcoin, which works out to 5 Satoshis per shareholder. Saying, quote, "We look forward to reporting our progress to shareholders over the coming quarters and years," was stated in the announcement. So if you remember, it was Marathon a couple of months ago, basically announced the same thing. I think CoinDesk ran a headline back in September. Crypto miner Marathon Patent Group buys 150 million in Bitcoin. And that at the time, I think I mentioned that, if only there was some way for these miners to acquire Bitcoin, besides having to pay fiat for it. So these miners had been basically selling almost all of the Bitcoin that they were mining. For example, they only have 5 Satoshis worth of Bitcoin per share at Cathedra Bitcoin, and they want to have more. And so now they're going to have to buy it. They're going to have to pay for it. At least they're learning their lesson and saying, hey, we should have been holding this Bitcoin and not selling all of it. And obviously Marathon learned that lesson in September, and now Cathedra Bitcoin is noticing it. But obviously miners have expenses, and they need to have a way to pay for those expenses. And that means they got to sell their product, which is the Bitcoin they mined. So there's going to be some selling. There's just no way around it. Even if they're paying their bills in Bitcoin, they have to use that Bitcoin to pay their bills, even if they don't convert it to fiat. So they have to get rid of their Bitcoin, spend their Bitcoin, whether they spend it as Bitcoin or convert it into fiat and spend it. But the point being, they're now realizing that they should have held on to their Bitcoin, which tells me they weren't valuing Bitcoin as anything other than a commodity that they were mining. They didn't have the vision that we have to know that Bitcoin is going to go up into the right forever, because this should have dawned on them a long time ago. When Bitcoin was at $15,000 and it was a lot easier to mine before we've had all the subsequent mining difficulty adjustments, before the halving cut the amount of Bitcoin that they're mining every day in half, that would have been the time to start trying to save as much Bitcoin as they make. When you go fiat mining at work, whatever you earn, you try and put some of that away for the future, whether you buy it in Bitcoin, whether you leave it in your checking account just to cover an emergency. You don't spend every penny you make, hopefully. And apparently these Bitcoin companies were, because 43 Bitcoin is not very many blocks worth of Bitcoin reward, especially since they've been in business for 7 years. So, more than just since this halving. They should have mined a lot more than 43 Bitcoin in 7 years. But, better late than never, I guess. And that's why they say you get Bitcoin at the price you deserve. Speaking of those who got Bitcoin at the price they deserve, El Salvador has been in the news recently because basically the Bitcoin strategy has been paying off for them. Bloomberg Business tweeted, El Salvador's sovereign debt jumped Monday after President Nayib Bukele said the 2025 budget wouldn't include, quote, a single cent of debt. Notes due in 2035 jumped to the highest since 2021. Bank of America upgraded the country's debt to overweight. Remember just months ago when El Salvador's bonds were deemed worse than junk bonds? Remember when El Salvador was mocked for spurning the IMF? Their Bitcoin strategy was reckless and destabilizing and bad for democracy. Uh, well, obviously you knew that those people were wrong, and now it's obvious to more people that they were in fact wrong. Bitcoin is hope, and El Salvador is that hope personified. And mark my words, other nations are watching. I've said multiple times throughout the history of this podcast that this is going to be the halving cycle that vindicates El Salvador. It's going to be the halving cycle that vindicates Michael Saylor and MicroStrategy. But in this case, it's going to be the cycle that vindicates El Salvador. We're already seeing that happening. And ask yourself, what happens when just one or maybe two small countries decide to copy Nayib Bukele's Bitcoin strategy? We're not even talking about large countries like the United States, adopting a Bitcoin treasury strategy. Just one or two small companies looking and seeing what El Salvador did and saying, I want to do that too, and taking the chance on Bitcoin. Just one or two countries trying to gobble up Bitcoin is enough to have a dramatic impact on the supply of Bitcoin and to shift that Overton window further towards Bitcoin hyper-Bitcoinization. Of course, Nayib Bukele gave a relatively meme-worthy speech about the state of the economy, et cetera, just the other day. And Lena Sichet posted on Twitter about it, something that Nayib Bukele himself reposted, saying, of course, he's talking about an entire nation state here, but you can easily apply the same thinking to yourself. Don't surround yourself with negative people who have never built anything of their own. Such people find a problem in every solution. As I've said, and I didn't coin this, obviously. Michael Saylor is more famous for saying it than I am, but even he didn't coin it. Bitcoin is hope. Bitcoin is a bet on humanity. They say Bitcoin changes you, and one thing that I've noticed about Bitcoiners is that in general, Bitcoiners are more optimistic and more energetic and more focused on the future than the general population. And it's not just about number go up, but it's about their future. Even when we talk about fiat collapse or government oppression, things that are going wrong in the world, it's always with an eye towards the future and how the future is going to be better, and how the future is going to be better because Bitcoin fixes this. And Bitcoin is already fixing El Salvador, and it's going to fix the world eventually. But as they say, gradually then suddenly. It started with El Salvador, but El Salvador is just the beginning. And it's really cool. And you ain't seen nothing yet because we haven't even had our face-melting bull run. Imagine what those countries that are watching El Salvador and maybe wanting to mimic them now are going to do when Bitcoin's 100,000 a coin or 200,000 a coin, or when it's $1 million a coin, and El Salvador is one of the wealthiest countries in the world magically overnight, at least on a per capita basis. That is truly going to be amazing. All right, on to what makes today and every Wednesday special, and that is that today is DCA Wednesday. And for those of you just following us, just tuning in for the first time, if you don't know what DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. This is going to be our 165th weekly Bitcoin stack. So our regular interval, we chose weekly on Wednesdays, and we wanted to keep it simple. So we chose our equal portion to be just $20. And I chose that amount because it's an amount that most of you listening to the sound of my voice should be able to come up with on a weekly basis. Some of you probably can't. For others, $20 isn't even worth stacking. So if you're in Michael Saylor's camp, obviously you would stack more. If you can't afford $20, maybe you stack as little as $1. Again, these are you do you things, but I picked $20 because I think looking at the statistics of where our listeners are at, over half of them in the United States, for example, and in general, I think the average person listening to the sound of my voice can relate to stacking at least $20 a week. So we kept it simple. We stacked just $20 a week, and doing so, in just a little over 3 years, we've converted $3,280 into a stack of almost 10 million Bitcoin, almost 10 million sats. Ooh, Bitcoin, that'd be glorious. A stack of 9,873,792 sats. And by dollar cost averaging, we've acquired the Satoshis at an average purchase price of just $33,219.25. So almost half of what Bitcoin's current dollar value is. A little more than half, but still not too shabby. As usual, I'm going to use the Cash App to add to that stack today. Again, we don't have any sponsors of the show. Cash App is certainly not a sponsor of the show. I just like Cash App because I think it's easy to use, and most importantly, because they're going to let me transfer my Bitcoin to my hardware wallet for free when it comes time to do so, whereas all the other services I use from time to time charge a mining fee. So I have Cash App open. I've already got $20 on there. In fact, I have exactly 20. It's all I have in Cash App because I had some money in there and I knew DCA Wednesday was coming up, so I just left $20 in there. So it's just a matter of tapping on Bitcoin, tapping buy, entering $20, tapping confirm, and boom, just like that, we've added another 31,538 Satoshis to our stack. So Bitcoin went up a tiny bit. It was up above 62 while I was talking, but it retraced a tiny bit. So we bought it at a price of $61,988, a price that we have not seen since back in July. In August, we purchased at $61,155, so close. But then before that, it was back down to 58 and then 55. So the point being, the price of Bitcoin apparently is trending back up. And as a result, the number of Satoshis we received trended back down. We got 2,000 fewer Satoshis today than we did last DCA Wednesday. But that did increase our stack to 9.9 million sats. We now have 9,905,330 Satoshis. So maybe 3 to 4 DCA Wednesdays away from meeting our 10 million sat goal, depending what happens to the price in the next month. And that is really cool. It did increase our average purchase price by just under $100, $96.15 to be precise. So our average cost basis is now $33,315.40. Still not too shabby considering Bitcoin is ringing in right now at $61,988 per Bitcoin. Perhaps more importantly to most of you, I know a lot of people like to value their stack in fiat terms. Even though you value wealth in Bitcoin, it's fun to see what that fiat value is worth, since when you go to the grocery store or pay your mortgage, most likely you have to pay it in fiat. So we still live, most of us still live our life with fiat, whether it's the dollars or pesos or euros as that unit, that reference unit. So when Bitcoin hits $100,000 per coin, which is looking like it's getting closer and closer. I mean, we're at almost 62,000 right now. So it doesn't even have to double to get there. And Bitcoin can double in a blink of an eye. If you've been following it, you know that to be true. But when Bitcoin does hit 100,000, even if we don't stack another Satoshi between now and then, our current stack would have a fiat value of $9,905.33, almost, actually more than triple the $3,300 now that we've converted into Bitcoin. When Bitcoin hits $1 million, which I firmly believe it will do eventually. Of course, Samson Mao is famous for saying he believes it's going to hit 1 million before the end of this year. A lot of people think that's impossible, but you just never know. Of course, Plan B's stock to flow model says Bitcoin should hit 1 million on average during this halving cycle. I think a lot of people think that we'll maybe get to 200,000 or 300,000 this halving cycle, and then maybe 1 million in the next halving cycle. But regardless, I believe it will hit 1 million some point in time in the future, probably sooner than later. And when it does, without adding a single Satoshi to our stack would have a value of $99,053.30, significantly more than the $3,300 that we've converted into Satoshis. And if you remember, Fidelity's Jurien Timmer says that by 2038, one Bitcoin will be worth $1 billion. Whether or not that happens, who knows? It's certainly possible that it will happen eventually. I mean, if we see hyper-Bitcoinization, it's probably likely that it will. And if it does, our stack, without adding a single Satoshi to it, would have a US dollar value of $99,053,300. And that would definitely put you into the range of Bitcoin billionaire. One of those people they write an article about and said, can you believe this person was just stacking $20 a week? And all they did was stack $20 a week for 3 years. And if you'd have done that, you'd have almost $100 million now. That's just almost impossible to comprehend. But so was $69,000 Bitcoin 8 years ago, or $20,000 Bitcoin seemed impossible in the beginning of 2017 when Bitcoin was under $1,000 a coin. In fact, I don't think it broke $1,000 a coin until like July of 2017. And then it hit that $20,000 mark just a few months later on like December 17th of 2017. So, that was 20x in less than 6 months. So when I say Bitcoin can double in the blink of an eye, I mean, it's done more than that. So, if Bitcoin 20x right now, it would be over 1 million. And so if Bitcoin does this year what it did in 2017, nothing more extraordinary, Samson now would be right. We'd hit $1 million Bitcoin by the end of the year. So who knows? As I've always said, nobody has a crystal ball. Bitcoin's going to do what Bitcoin's going to do. But I firmly believe that is going to continue up and to the right, regardless of whether you have a red candle every once in a while. 2 steps forward, 1 step back is still 1 step forward on average. And Bitcoin is going to keep doing that 1 foot, 1 step forward, at least for every step it takes backwards, an extra step forward, until we've achieved hyper-Bitcoinization. Before I go, I want to ask those of you listening to help support the podcast by feeding the algorithm monster. Of course, you can contribute value back from the value for value model by streaming or boosting sats, but I'm talking about doing something simple by making sure you're following us on Twitter. On Twitter, we are at BTC Bulletin Pod, or depending where you're listening to this podcast, rating and reviewing this podcast does lots to help promote this podcast, to boost this podcast, where more and more people see this podcast in their podcast feed. Simply reviewing this podcast, simply following us on Twitter may help some newbie that has never heard of Bitcoin or has maybe had 1 or 2 touch points, but is not hasn't gotten off zero yet. They haven't bought their first Bitcoin yet. Help them see this podcast. Maybe they don't realize there's still people out there that think you have to buy a whole Bitcoin. There might be someone out there that sees me tweet about this podcast or sees this podcast pop up in their feed and go, wow, I can buy just $20 of Bitcoin a week, and I could do that and have a stack of almost 10 million sats if I had been doing that over the last 3 years. And so, maybe you'll help orange pill somebody just by following us at BTC Bulletin Pod on Twitter or X, or by liking or making sure you're subscribed and rating or reviewing this podcast on whatever podcast platform you're listening to. Also, I just like to hear from you. Again, you don't need to send a boost. It would be awesome if you do, and we do read our boosts. When you send a boost, we read them on the next episode of the Bitcoin Bulletin Podcast. But you can also just DM me, again, at BTC Bulletin Pod on X or Twitter. But if you're not on Twitter, you can send me a good old-fashioned email, and my email is bitcoinbulletin@protonmail.com. It's bitcoinbulletin@protonmail.com. I look forward to hearing what you have to say about the podcast, or just saying hi, because I like to be able to visualize who I'm talking to when I'm talking about Bitcoin. Like I said earlier, I like to talk about Bitcoin. I like to talk about Bitcoin to people. Right now, when I'm recording, I'm looking at a laptop. I'm talking into a microphone. But when you reach out and say hi, I've got a face to put with, or a name at least, to put with the other side of the screen, the other side of the microphone. And it's just ingratiating to know who you are. It makes me happy to know that to have an idea of who you are and who's listening to this podcast. But I digress. Either way, don't forget to join us next Wednesday and every Wednesday while we continue to grow that stack, as long as there's still someone willing to trade their Bitcoin for our worthless or increasingly worthless paper US money. Either way, though, keep on stacking those sats, you sexy sat stackers.